We also have with us yet another earnings update. We're now joined by Raj Jain, Chairman and Managing Director of RS Software. Good afternoon, Mr. Jain. Can you take us through your numbers since we don't have them?
Good afternoon, Manika. How are you?
I'm very well, sir.
Thank you so much for having me here, and glad to be on CNBC. We've had a wonderful quarter, pretty much on track, with revenues around rupees 97 crores. We've had a growth of about 26% in our profits after tax over the last year. Our net worth has grown by about 35%, and our operating margins are up to 27%. And we believe that moving forward, we can commit double-digit growth in our profitability, as I've said earlier on this channel. And as a result of that, our board is pleased to announce today an interim dividend of 15%. We believe in rewarding our stakeholders continuously. And last year, in our 9 months, our cumulative interim dividend was about 25%, and this year it's up to 40%. But
if I may just interrupt you, Mr. Jain, on both the top line and the bottom line, your numbers don't look very good. In fact, your stock is currently falling, even as we talk, down 5%. I mean, the consolidated total income has come in lower quarter on quarter. Consolidated profit is barely higher quarter on quarter. Can you talk us through what the outlook is from here on?
Absolutely. And Manika, let me tell you that our quarter 3 is traditionally our weakest quarter. If you look at our any year in the past, that's because of our major client. This is their first quarter of the fiscal. For us, is the third quarter, and typically our revenues are about 8% lower in the quarter. This year is down only by about 4%. So we believe quarter 3 is on track. Our bottom line.
But revenue growth has been a problem through the fiscal, hasn't it? Revenue growth has been very sluggish through the fiscal. Is it likely to improve in the next fiscal? That's FY16?
Yes. So let me tell you, that's where I was going, Manika. The answer is yes. And let me tell you what's happening with us. We have a major client concentration, which is well known to the investor community, and we are in the transition of de-risking the client concentration. And where we are headed is to leverage on the major developments in the payments industry. And as you probably would know, that the move is towards the digital economy. And
Mr. Jain, at the beginning I think you said your profits were up about 20-odd%, but the numbers in front of us
26%.
26. The numbers in front of us says 16.6 to 17 crores. So can you break up consolidated standalones? When you say 26%, what are you referring to?
So 26% is the growth in the net profits after tax from the same quarter last year. That's on the consolidated.
Year on year is 26%.
Okay.
Year on year.
All right.
That's right. Thanks, Manika. And our net worth is up 35% year on year. But coming back to the digital economy, and which is really where we've seen recently crazy valuations for companies like Alibaba or Amazon, or here at home in India for Flipkart, Snapdeal, and Paytm recently. But as these companies are building themselves for the e-commerce space, there needs to be a parallel build for payment companies to be able to connect commerce and payments together. You've heard of Apple Pay recently being launched globally, and we are an integrator for the Apple Pay with the merchants and with the acquirer community. And Apple spent last year about $25 billion on the developer community. We see this trend moving forward, and if we were to transition, you're looking, Malika, for the longer term picture of the company, we look at ourselves on one hand continuing to work with the core systems in the payments of authorization, clearing, and settlement, and at the same time leveraging this knowledge to build onto analytics and the social media.
All right. Mr. Jain, sorry, forgive me for interrupting you, but I'm going to ask you to translate that into numbers. I think first half revenue growth was barely 2%. This time, this quarter gone by, revenue has in fact shrunk. Can you tell me what revenue growth you'll end FY15 with? What your expectation for revenue growth is for FY16? And also, can you tell me what the margin picture looks like? Because that data we don't have as yet.
Okay. So America, we look at this year with a growth in our profitability of about 22% year on year. That's where we expect to end the fiscal year. And we see a continuing trend for ourselves in the next fiscal, and we see an improving trend beyond that as we are launching our M&A strategy. We're in advanced stages of it.
Okay.
Our goal is to capitalize on this.
So you're not giving me numbers. Could you give me specific numbers? What is the FY16 revenue target? What is the margin expectation for this year when you close it? And the margin expectation for next year in terms of growth?
Sure. Our margin expectation for this year, for this quarter, has been 27% for the operating margin level. I think for the year, it'll be an average of about 25% for our operating margin levels.
Okay. Mr. Jain, you say you're looking at... Yeah, yes. Sorry. Look, go ahead.
Okay, and in terms of our FY16 and FY17 beyond, America, what I'm going to communicate here is that we are transitioning our strategy in order to expand into the digital payments opportunity. And that's an important factor for the investor community because our future growth and our future
and some of the growth you said will come through M&A. So we believe you're sitting on cash of about 136 crore rupees. So is all of this earmarked for M&A or something else?
Yes, the 150 crore cash that we have as of December 31st is earmarked primarily for our M&A activity.
Okay.
And at the same time, while we execute that, like I mentioned early part of the interview, that we are rewarding our shareholders
with the dividend as well.
We've done up to cumulative dividend of 40%.
All right. Yes. Thank you so much, Mr. Jain, and wish you all the best.
All right, we'll get on to the other big news story that's dominated the headlines over the last 48 hours, and that is SpiceJet. Ajay Singh, the potential new owner of SpiceJet,